What's good, y'all? It's DCRYPT back with another video of the boot camp, and today I'm gonna teach you guys up and down trends. So, getting into the market, one of the most important things that I've ever learned in my trading history is which way do I trade? Because obviously you can trade the upside and you can trade the downside, but which way do I trade? Well, today, lucky you, I get to teach you how to find what direction you're going to be trading the market, right? So today we're learning uptrends and downtrends, right? What is an uptrend and what is a downtrend? An uptrend, obviously, you know what a trend is. It's trending up. You know what down is. You know what a trend is. Downtrend, it's trending down, right? So it's pretty self-explanatory, but we have to be able to visualize it. Because on the charts, when we're looking at the market, we're going to have to look at which way is it going, right? This is how we're going to be able to know, right? So these videos are going to sound very repetitive, but that's because it all ties in together and my strategy doesn't really ever change. It's all the same thing because I look at the same things and it works and it's been good. But yeah, so we all know that every low is where buyers are stepping in. And we also know that every high is where sellers step in, right? So when you're continuously breaking highs, this is telling you that sellers are not in control. Buyers are breaking past these sell-off levels, and it's simply correcting and going higher. All right, this is an uptrend when you have higher highs and then you have higher lows because each low is higher than the previous low and each high is higher than the previous high. Now, in a downtrend is when sellers are in control, right? Obviously, because it's going down. But you have lower highs here, and then you have lower lows because each low is lower than the previous low and each high is lower than the previous high. So now we know what an uptrend and a downtrend is and what they consist of. Now, when you're looking at the market, there's going to be a lot of this up and down, up and down, up and down, up and down. What you could also have is the market kind of just moving sideways. It's not really making any higher highs, it's not making any lower lows. It could, sometimes get above one high or like barely get above it like this. It could be like that. This is a range right here. This is when the market's just not really going anywhere. It's not making higher highs, it's not making lower lows, it's not having a consistent trend. Whenever you have this is called a range. Whenever you have this is what you want to avoid. You can trade in between these levels, which I'll get into in future videos, which is why I say it's going to get all repetitive, but this is a range here, right? So you can trade in between these levels here on macro time frames, but it's going to be a lot more difficult. Once you start seeing the charts, how we see it, with the levels, the higher highs and the higher lows, it's going to start to become a lot more simple, and it's going to give you the confidence to take the trades because you know where price might start reversing. You know when price might start bouncing. Is it promised that it will? No. Do I know that it's going to reject for a fourth time? No. But is it likely? Yes. So when it starts approaching that area, if we have two sell-off levels on the same area, then you would start to anticipate a reversal here, right? These are the highest chances you're going to have of taking the trade, right? Then you start waiting for other components to enter your trade and give you confirmation. Then you can enter, right? Normally, you don't want to trade a range on smaller time frames, and we'll get into that as we continue deep into the boot camp. But this is a range, uptrend, downtrend, right? That's the basics. All right. Now we have an uptrend and a downtrend and a range. Now, what happens when the market starts going from an uptrend to a downtrend or a downtrend into an uptrend, right? Well, this is what you're going to call a break of structure. A lot of people have break of structure, market structure shift. They all mean the same thing. The reason I call it break of structure is because if you have a structure going to the upside and it breaks to the downside, that's your reversal. If you have it to the downside and it breaks to the upside, that's your reversal. It's a break of structure, right? So we're going to call that a BOS. This is what we call a break of structure. When you're in an uptrend and you're making higher highs and higher lows, and then you end up breaking this low, because you have to remember every low is where buyers step in, right? So if buyers are no longer stepping in and we end up falling through that, candle closes below, and then, obviously a retest, make a lower high. Sometimes it could be like this, but as long as it's still making lower highs, it's still confirmation for a downtrend. A lot of people get that confused. Just because it goes back above this, where buyers stepped in at. Buyers stepped in down here, closer to this low. So if you get above this previous buy, this level's already invalidated if it's fallen through because buyers didn't step in there. But yeah, a lot of people get that confused. Make sure that you understand that it's making a lower high, and that's what's causing it to reverse. Not the fact that it's breaking this low. It's both actually. So buyers aren't stepping in, and sellers are still in control, right? So that would be a reversal. Same thing to the upside. If you break a previous high, you can have a break of structure here and then start moving into the upside. Same thing as over here. The market can always, pretend that it's going to go back down, but it's still making a higher low and it's making higher highs. So it's looking back into an uptrend. So this is what you want to look for. And then obviously, I'm doing it up here. You guys are probably wondering where are the candlesticks at? Where are the candlesticks at? That's going to be the next episode. I'm going to teach you guys exactly what candles do. But in the meantime, we have to understand what trends do before we get into the candlesticks, right? Because this is the ultimate basic scale. Now let me reset these lines. These are all old from my actual day trading. All right. So when you're looking at the market, you can see that it's obviously, I'm going to go into a larger time frame, and I'll get into time frames on another video as well. But you can see that we have highs, we have lows, we have highs, we have lows, we have highs, we have lows. Obviously, it doesn't look as perfect as this. I only did this to give you guys an example of what it was going to look like, right? Here, we have a high, we have a low. We have a higher high, we have a higher low. We have a higher high, a higher low. I'm skipping past a lot of highs and lows because obviously every candle has a high and low, right? So I can really do this if I wanted to. High, low, like this, boom. Overall, we're still uptrending, right? You're making higher highs, making higher lows. And then we start reversing. See how we broke this low and we started making a lower high and start making lower lows, lower highs. And then what do you notice here? We're not making higher highs here. We're not breaking trends yet, but we're making higher lows. So understanding the trend and understanding higher highs, higher lows is going to help you 1,000,000,000% when it comes into figuring out which way you want to take the trade. Because if buyers are in control, you obviously want to be trading the upside. If sellers are in control, you want to be trading the downside, right? So that is uptrend and downtrend. And then obviously if you go into a larger scale, you can see it a lot more clearly, like higher highs, higher lows, like this, right? Because we're always growing with inflation. But on macro time frames, it's going to be a little bit more difficult. This is when you want to start going into larger time frames, setting levels, marking your highs and lows. Like for example, we were in a downtrend from early 2025, February, mid-February, all the way till early April, right? And then we started uptrending. So from the downtrend, we made lower lows, lower highs, lower lows, lower highs, lower lows. And then right here, you can see that's where we started breaking out and making higher highs and higher lows, right? So that is trend. This is the basic, dumbed down version of trend. And it doesn't really get more complicated than that. So I really wouldn't even say dumbed down. Make sure you understand the higher high concept, the higher lows, lower highs. Uptrend is higher highs and higher lows. Downtrends is lower lows and lower highs. So make sure you understand that so that way when you're looking at the charts, you're like, okay, we were uptrending for a while. You see how we're going to the top right corner of the screen? And then we have a low here. You see how we bought in? My white candles are green, by the way, and then my blue candles are red. But if that wasn't obvious. Anyways, we were uptrending, right? Look at where the biggest buys are, the biggest moves right here. Boom, 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 boom. You see buyers stepping in there. So whenever these big levels, were price initiated the buy, once you start breaking that, it's almost textbook. Then you start seeing which way you're supposed to be trading, right? And then, once you're past that level and you see the trend, obviously you'd want to break the next lows to continue the trend because you're going to continue playing the downtrend until it reverses, right? And you'll find the reversal once you start seeing that we're no longer making lower lows. We're making higher lows, lower highs, I mean, or higher lows, sorry. Yeah, so see how it's going from lower lows to then making higher lows. This is very important to understand. This is going to help you a ton when it comes to day trading and spotting things, not necessarily predicting, but anticipating and reacting to when it does happen. Because we don't just try to predict and be like, oh, I hope it goes my way. I think it's going to break out. I think it's going to reverse. No. What we do, because ultimately this thing could do this, right? And go even lower. But it's showing signs of reversal. If it ends up breaking out, I'll wait for a fair value gap, which we'll get into in the future. Boom, fair value gap. I'll wait for it to start retesting, play some swings and target previous highs. There's your swing trade right there. Boom, basic knowledge and just understanding the trend started and initiated this trade idea, right? And obviously it hits TP because once you're playing in between levels, you want to target those levels, right? We're going to get deeper into that. That's just a sneak peek into what you guys are going to get deep into and, start learning and actually practicing. But yeah. All right, guys. This has been trends, up and down trend reversals, break a structure. I hope you guys enjoyed. I hope you guys are staying in tune with the series. It's been Decrypt. I'm out of here. Deuces.